2022 is in the books. Quite a year for real estate, wasn't it? Real estate in 2022 was a lot different than real estate in the years or in the decade before. Vanesa, you're the real estate expert here at PerFinEx. How did you experience real estate in 2022? Did you join us at the right time?
I did, definitely, I did. I mean, the prices went up if you compare to the other years, that's for sure. But right now we have, like, the prices are softening up a little bit because also of the high interest rate. My opinion is that the market, the real estate market, stayed pretty stable and all that. I mean, we went through Corona. Everyone thought Corona is here, the value is going to go down from properties. It was not the case, right? So everything remained pretty stable during that time. Even the demand for housing continues to increase. So the search, according to the Bund, according to the government, Germany requires a minimum of 400,000 houses per year, right? And we were able to serve only approximately about 248,000, which is still not a lot. And this tells you that there is so much potential on the existing real estate market in Germany. There are also many surveys that have been done. So there's actually a recent survey from the Real Estate Association from Germany. And it came out that, I think it was about 157 companies, real estate companies participated in that survey. But it came out that 30% of the new construction have been canceled. Mm-hmm. And this shows you how much pressure is on the existing real estate market. So, I mean, the prices went up for renovations, for material costs, and of course, these constructions are just blank, lying there, doing nothing because they had to be canceled, right? And it's sad, but at the other hand, there is so much potential on the existing market, that's for sure. And even again, if you compare it to other countries as well, like UK, France, Switzerland, Austria, we still have some air to go up in the prices, right? We still have some gaps. So we're going to talk about this later, about the bubble and everything, but there's still some gap and there's still many opportunities to invest here in Germany. There are still great opportunities, and demand for rental space for us investors is plays an important role, which means that demand of renting increased from the second quarter to the third quarter this year by 48%. By 48, this
incredible,
it's a huge number, and even the rent itself increased by 3.4%. So. And I believe, it's not only me, there are also other real estate economics, I believe also the rents are gonna increase over time drastically.
They have to. You mentioned this statistic with the 400,000, and this is pretty legit because it's a number from the government. Exactly. And if you actually look at it, over the last couple of years, like over the last 20 years, we didn't even reach it once. Mm-hmm. I think if I remembered correctly, we reached it like one time 300,000. All the other years were just between 200 and 250,000. There's right now, there's millions of flats missing, and that's why rents have to increase.
It has to. They have to build more. I mean, there's this huge pressure on this market, and it has to change something. And even if they say, oh, the real estate is it's cheaper right now. Not really. Like, if you look at the analytics, it went down on 1%. That's not a lot, right? But still, you can get great deals nowadays. So due to the high inflation and the high interest rate, there are great deals on this market. But yeah, it tells you just how exciting, but also how important it is to keep in mind to invest into real estate, because it's always gonna grow up in value. Always, always.
One major topic you mentioned is inflation, which is, of course, on a ridiculous level right now. I mean, it's on an all-time high since the introduction of the euro more than 20 years ago. Mm-hmm. We had more than 10% in November, and energy prices are up by about 40%. It's completely ridiculous. And as of right now, it doesn't seem like inflation is going to normalize or come back down anytime soon. So what do you think? How did inflation impact the German real estate market in the last year?
To be honest, it impacted a little bit, but our clients are still seeing this value to invest into real estate because exactly in this time you really have to use your chance to invest into real estate and use the inflation as a tailwind. I mean, we're having a high rate inflation of 10% right now in Germany. Real estate is, we call it here in Germany, the mother of inflation-protected investments. So nothing can really happen to your real estate investment. It won't go down, even if the inflation rate goes down. It will always keep either stable during that time, but it will go up in value. It's the same thing. Let's say you're buying a car for 50,000 euros and you're paying off every year 10,000 euros. So after 5 years, you pay that off, right? Can you sell the car for the same amount of money? You cannot.
A lot less.
Exactly. And even if you used it, I mean, you used that car and you cannot sell it for the same price. Different with the real estate. There is a tenant, is using your property, but you can go up in value, like, you know, there with the market, and especially with inflation. And I mean, inflation, like high inflation rates, is not a yield killer. It's the opposite. It shouldn't stop you from investing. We really have to react and respond and invest. Otherwise, we're going to really fall a victim to this inflation. So it's very, very important to keep that in mind to take the inflation with you, even now with the 10% rate.
It's your best friend, basically, because every month that we have this high of inflation, you pay the bank off with devalued euros. Of course, the nominal amount of your mortgage will stay the same, but the monetary value is going down and down. And that's also where many people believe, myself included, that inflation is not going to come back anytime soon because it helps everybody that has a lot of debt, like real estate investors, or, of course, who's the greatest debtor of all? The government.
Exactly.
They profit from that tremendously.
That's correct, absolutely. And I think, again, shouldn't be a yield killer. Inflation shouldn't stop us from investing. Also, as I mentioned, the constructions have been cancelled, more like 30% of them. It's just because of the construction prices, right? So even if you do a calculation again for your renovation construction, these went up as well. They have risen as well. So you really have to make a better calculation, go with more money into that. So I will always suggest to go with 20% more. But again, it's recommended to be more on top, especially for renovation, material cost, because the prices went up.
You need to factor in more time and a lot more money, yeah?
Yeah, correct, yeah. And yeah. Just, again, important, seek expert, like advice from experts. That's also an important thing. And you will be on the right side, like on a good side, for sure.
You mentioned the interest rate that increased tremendously. Over the last 8 years or so, we basically had 0% interest rate in the European Union and basically everywhere in the world. Now, because of that high inflation, central banks around the world raise their interest rates, and of course banks follow by raising their mortgage rates. In 2021, we were financing for clients for 0.some%. And
unbelievable.
Unbelievable. And now it's like went up to almost like 5%. Now it's like around 4%, 3%, something like this. So how did this crazy interest rate change from 0% to 5%? How did this impact the real estate market?
I mean, there are a couple of factors that impacted that. But first of all, I believe the real estate markets were pretty strong during that time. Again, during Corona, during the war, what is going on. So in general, the real estate market has been stable for this time. Of course, like 2-3 years ago, before Corona, we had this great interest rate. And still clients are there, oh, why I haven't invested in that time? But it's over. Again, you have to really go into the time right now and use it for your profit.
This is what people might say 2-3 years from now. We don't know, but maybe they'll say, oh, I should have invested in 2023. We don't know.
And also there are so many countries, they have way higher interest rates than us. Like when we talk to our clients, expats, they're telling us all the time in certain countries there's a way higher interest rate. So Germany is still good, right? And at the end, you can deduct the interest rate from your investment. So you can deduct it 100% out of it.
If it's an investment, not as a home.
Exactly, very important. If it's an investment not on home, and which is a secondary part, so that's not really important, so you can deduct it. But I believe the interest rates will stabilize. I mean, we having better offers right now from last week. The interest rates are going down right now and stabilizing, and still clients are seeing still the value out of the property, even if they pay 1 or 2 interest rates more. What happened couple of years ago, but either you pay 1 or 2% more and having a better selling or a buying price instead of paying 30 to 50% more on the selling price like 2-3 years ago. I preferred this option, right? I mean, there are great deals right now on the market, and why not to use that? And even if you pay 1 to 2%, you still have the option to sell your property after 10 years tax-free, or do a refinance. And that time might be a better interest rate, right? We don't know. We don't have a, how you call that?
Glass
like
ball.
A glass, what?
Glass ball?
Exactly. You don't have that thingy to see, okay, this is going to happen in the future. It's just prediction. We assume that, but I think you should use this time for sure. And there is this high demand, again, there is this high demand on housing. Even in renting and housing, I mentioned before, like Germany is missing over 400,000 homes.
Each year.
Each year. Perfect. Each year. And we were able to serve only 248,000 homes. So, I mean, this tells you everything.
And if you connect the two, if you're saying interest rate, it was 0 or 1%, and now it's 3-4%, so like 2-3% higher. Okay, but compare it to the inflation rate. It was almost also 0 or maybe 2%, but now it's 10%. So you have a 2-3% premium on the interest rate, but you have like an 8% premium on the inflation rate. So you're still winning.
Exactly, and I mean, high interest rates are the after effects due to the high inflation. It's normal. It's completely normal, but and I believe it will kind of stabilize also. I mean, the government already said it's going to be around 8 to 9%, but it's still high, right? I mean, it's, my opinion, it's impossible to really go down as it was. Like before, we had an inflation rate every year between 2 and 3%, right? So every year, everything got more expensive. I don't believe it's going to go that down, but it will be somewhere between 8 and 9% for sure, which is still high.
At least over the midterm, yeah.
Yeah, that's true.
Closely connected to inflation and interest rates is the third topic that was of major interest last year. Russia invaded Ukraine in February of last year. It's actually crazy if you think about it, right? That a war in the Ukraine has an impact on the German real estate market. But that's apparently the world that we live in. So tell us a little bit more in detail. What was the exact effects of the war in Ukraine on the German real estate market?
Yeah, I mean, supply shortages like poor import, poor export, even the material prices, they were not able to arrive on time. Based on that, of course, the 30% of the construction have stopped or have been cancelled. So this was the main factor. Also, in the same time, the prices for renovation and material costs increased, which is the after effect of that. Also, the energy prices, they increased.
A lot.
I mean, everyone is familiar with that right now. Everyone gets their bills at the end of the year. And this is also an after effect from, unfortunately, of the war. So even that, you really have to, if you're purchasing a property, you really have to look into that as well. Because Germany is reconstructing all this energy debate, right? So this is also a very important topic. But of course, the prices have risen. Also, construction prices have risen, so even that. But one of the most important things is we also having a lot of refugees here in this country, right? So I believe there are right now about 1 million.
Yeah, a little more even, yeah.
Oh, it's a little bit more?
A little bit more, and next year they think it's at least 1.4 million from Ukraine alone.
There you go. I mean, that's a lot, right? And
they need to live somewhere, yeah? Exactly. They need health insurance, they need something to live, they need food, yeah?
Exactly, and this is the main factor. They need a roof over their heads, they need to eat, right? And everything what is covered up. So what does it mean? These people are also going to stay here in this country. maybe most of them are not going to go back to their country because it will take some time even to kind of rebuild that country again. So we talked about this number about the 400,000 homes we're missing in Germany. It might be even more next year, right? It might be even more because we having also some so much refugees here. And this puts also, again, pressure on the existing real estate market that we really need home. And there is a huge demand on this, right? Up to 48%, rentals increasing by 3.4%. It's a huge demand. And also, at the same time, the government is rewarding you when you're creating space. So even, let's say the material prices go a little bit down, the government will reward you on that. They will give you all these tax benefits and everything else. So it's still a great profit what you do.
I mean, the government can create these 400,000 flats, right?
Yeah.
They're relying on us. And if you actually look at who are the landlords in Germany, it's like 80–90% or something is owned by private people. It's not like we have like these real estate corporations that own entire Germany. It's not even close like that.
And even better, let's keep it that way, right? Most countries are companies who are owning most of the real estate. But here, let's keep it that way. Let's open that way also to people to invest into real estate. Why not?
When we tell people to invest in real estate, then of course there's always the big question, is it the right time? Over on the GermanReal.Estate YouTube channel, we just recently published a lot of videos about this real estate bubble, right? The World Bank is expecting a big real estate crash next year. UBS, the Swiss bank, published a report putting like Frankfurt on top of their real estate bubble index. I'm very, very skeptical about this real estate bubble discussion. But you're the real estate expert here. So tell us, Vanesa, what's your forecast for real estate in Germany in 2023? Are we in a bubble?
Let's start different. Let's start it the other way. Basically, what I think the rents are going to increase massively. I think the rent's going to increase. We talked about the 48% demand on rental housing and the actual rents. And I mean, these are also forecasts what we don't, it's not just us what we have as a forecast. These are also, for example, Dr. Schick, he is the leader of the board from the German Real Estate Association, or Ms. Korkfield, the leader of the Immobilien Scout. So these are all forecasts also from real estate economists, right? They're having the same assume what is going to happen for the next year. And we are on one that the rents are going to increase. The interest rate will stabilize, so the euro can't really afford that. I mean, the European Central Bank knows that. There's too much debt during Corona, right? So they cannot really go more up because it will be very bad for them as well. And still, the demand is there. For our clients, I mean, clients are still investing. They're seeing this opportunity as well. And if we're in a bubble, I don't think we're in a bubble right now, especially because of that. There's a lack of many apartments internationally. So there's a lot of room still to improve. And you really have to know how to deal right now in the situation. How can I, what is the development of my property? Who will take care of that, right? So you really need to see or to take that chance out of the situation right now. Very important. There are assumptions for next year, and like me and many more real estate economists, they don't believe in a bubble right now, no. Because again, you compare other countries around us, like UK, it's like upward prices. They don't even have all these advantages like we do here in Germany. And I doubt that it's gonna go like a crash or something else.
The major argument of these bubble enthusiasts is they just look at the prices, but they don't believe in this, or they don't look at the simple market economics, right? It's a simple supply and demand issue. In order to have a bubble, you need excess supply. You need more supply than demand, and then the prices will fall. We have the exact opposite.
Exactly. I mean, let's say even if, in America, like 2007, 2008, the market recovered pretty quick. It took, I think, about 5 years to recover really from the whole crash. And people made such a great profit out of that. I mean, I don't believe this is going to happen here. But I say, even if you can make such a great deal out of all the situation, that's for sure. and the market will recover pretty quick. It's the same like ETFs or funds, right? Market is down right now, but it will recover, right? So you just have to be patient in all this. And really start. That's the most important. Don't lose any time. Use the advantages you have. I always say the later you will thank you one day for that. Because otherwise, if you keep waiting with many more situations in your life, you're gonna be like, why I didn't do that before.
Waiting for the perfect moment, right?
There is no perfect moment.
For the perfect property, the perfect financing.
Yeah, and yeah, here I guess at the end, I just want to mention that at the end you should look also differently. Don't go to see the property first. Check your financial situation first. Partner with us, partner with me, really to see what does make sense for you, and then you go and see and look for a property. I always say the property will find you, right? There is this perfect or good property for you, but the property will find you. Go better that way, and then it's going to work out pretty well, I'm sure.
Vanessa, thank you very much for the interview. It was a pleasure for me.
Very nice. Thank you so much for having me here. It was a great interview with you, especially with a great view here over Munich. So thank you for having me here. And yeah, I'm looking forward to work with you guys.
And if you want to meet with Vanessa, there's a link down in the description below. Have fun, guys.